much for joining me on the Slice of Finance podcast. How are you today?
Good, man, Jared. How are you?
Doing well. I think you broke a record for just because of the overlap. I think we had this maybe like in motion before we had you on Slice of Technology, and I mean this is rare. I don't know of any people that have been on two and a nice.
No, just for the record, we're not doing this back to back. This is not like Avengers, Infinity War, and Endgame or whatever it was, where they're just cutting up in the middle for distribution reasons. A good month has gone by.
Yeah, you see, you're wearing. You have those Tony Stark glasses. You start talking about Endgame. We need.
Are we in the end game now? That's the question. Funny thing is, I mean, is a month since maybe I came on here, but you could have told me it's been a year. I mean, it's so much has happened since then. It's been wild. So
Yeah, that's been just kind of everyone's view of the market too. Is like you go away and anything AI. You go away for 2 weeks and you come back and you're lost. It just changed so rapidly. So what we're going to focus on today, we'll still talk about your like AI and what you've built, but we're going to focus more on kind of the financial side of things as well, and your kind of thoughts on, what are retail investors thinking. Let's first start off though, because we do have different listeners for this show versus the other show. Give us that quick, I like to say that Simon Sinek, why, how, what for the company, and then we'll dig in.
Why, how, what? I thought you were going to say the elevator pitch.
I switched it up this time.
But okay, why, how, what? So, okay, if we're starting with the why, investing in the public markets is just incredibly, incredibly important. We believe that it is paramount to every individual, quite frankly. And the evidence for that is just so overwhelming. I think the economy over the last few decades, frankly, has become a little bit a tale of the have and have-nots. Many people say that, but if you look at what divides the have and the have-nots, it's who is an owner versus just who are just employed in the economy, right? So who actually captures an upside in the economy, and the people that do that, they invest in the public markets. And so that's really the why for why we built the company. Like it's hard, like everything that happens in the entire world, it can be overseas, it doesn't matter which industry, it gets priced in real time in the public markets. And especially in the US public markets, which obviously are by far and away the largest stock market in the world. And so so to people to have an upside in that, to capture their share of that, and to do it in, I think, the right way, because as we can talk about later, there are many different ways that you can go about this. That is the why. The what is a multi-asset investing app where we've made available all the kind of things that you want to build a long-term sort of tried and true portfolio, starting with equities. We have crypto, but we even have things like treasury bills, corporate bonds. You can get into options of different kinds. So we really focus on giving people all the sort of asset classes that they might want to invest in, multiple account types too. So you can have a brokerage account. We just launched retirement accounts. We have some people that want to set up like corporate accounts and things like that. So really, we look at it as like wherever your money is, whatever you want to invest it in, we're sort of the bridge and the glue that makes all that happen. And then the final thing I would say add to that is how you go about building your portfolio is obviously incredibly important. And that's where we've done a lot of stuff on the content side historically, be that our own podcast, all the way from that down to Alpha, which is our AI agent, which since I was on here last, we've now actually spun out as a separate app. So you can go to type Alpha by Public in the App Store, and it's sort of just a watch list with AI superpowers. So that's like one way to get into it. We also have Alpha integrated into the Public app, so you can ask it any question about any stock. It's phenomenal for researching kind of companies, just so much faster than I think how we used to do things. And I think that covers probably the how and the what.
I'm curious, and I'd like for you to share with our audience. So you decided to have Alpha as a separate app. What was kind of the thought process? And I see the value in it, by the way, but would love to hear kind of in your mind why you wanted to have that separate.
To be honest, it was one of these things where Alpha for us sits like really far down in the user experience journey. So when we build product, we talk about the depth of the user experience journey. And, when you sign up to Public, we're going to ask you a bunch of questions. We have to do KYC, verify your identity. You got to link your bank. You got to build a portfolio. And then from that point on, alpha starts being really useful. But that's kind of pretty far down. And so we were thinking a lot about how just the numbers that we've seen from people using alpha for research have just been, frankly, orders of magnitude different than people that don't or in the past. And so we're just thinking about how to make it more widely available. And then, we were all running around with the Apple Stocks app on our phone, which tells us, it tells us how much a stock is up or down, but doesn't tell us why. And that's the really interesting part, right? Whether something is up 3, 4, 5%, whatever, like what's really interesting, I think, about the market is why things are moving the way that we're moving. And so we built Alpha to basically be sort of like as if ChatGPT and Apple Stocks had a baby, in that, you're at your watch list, and we actually have AI helping you with that. So you just screenshot your Apple Watch list and upload it, and it automatically follows all those stocks. So the onboarding is super simple. But then the AI constantly monitors your watch lists and tells you why things are moving. You get push notifications when you open the app. There's a little line that says like, hey, this stock is up 5%. It's due to XYZ. And from there, you can tap on it and just continue to ask more questions. And so it's just a phenomenal way for people to get educated on the stock market, to get their head around it, to start following it more intimately. And yeah, we just didn't see a reason why that shouldn't be available to as many folks as possible. And so we've priced it really low at an introductory offer. It's like $1 a week. So I would argue anyone who is investing can afford that. It's obviously free if you have a public account. But you don't need to have a public account. You could just download the app and use it without a public account if for some reason you still prefer to have your investments in at an offer.
I love it. I think it's a great way for you to start building trust too with people that are not yet utilizing public. Yeah, I mean, I don't hear anyone say that the Apple stock watch list is like the best thing ever. So this
one of these things we've always like just taken a little bit for granted. Like, if you think about it, everybody has it. Everybody has some stocks they care about. Whether you own them outright, whether you follow them, whether your friends or your parents work at the company, like everybody's got some stocks that they care about. But what's interesting is not always just to know whether it goes up and down, because markets are volatile. So sometimes things go up and down for apparently no reason, except there's always a reason, because ultimately it's people buying and selling. And so the AI finds that reason and tells you, and then you can dive into it. And it's just incredibly activating, sort of like we've had it described. I mean, the feedback from the first month here has been really interesting, because people are a little bit like, it's an unlock for them that they didn't have before. Because before, you might have get funneled into like, oh, here's some news, and then you go and then you got to pay for some Business Insider article or whatever, which is all the news these days are written with some sort of bias, right? Whether you go on social forums, there's bias there. This is just the facts. And I think what we've really hit, obviously AI generally on the rise, I have to tell you, but the other big thing that's going on in the world is, I think, the big backlash against news and kind of media of any kind. And if not backlash, then at least just like people recognizing and being more critical thinkers and realizing that there is a bias in almost everything. But there is really a zero to no bias in an AI just telling you, like, this is the sentiment, this is why stock's moving, this is the earnings report that came out, these are like the things, it's like people just want the data, and then they want to like reason bottom up for ourselves, which, by the way, I think is an incredibly helpful development in society as large. It's essentially more people becoming first principle thinkers. And I think that's especially true in the markets. And that arguably is also how you find alpha. And that's why alpha is called alpha, I guess.
I like it. Oh, it's whenever you can get stuff direct from the source too, right? Like, that's how you can limit that bias. So by pulling from these SEC documents and company announcements, right, you're able to give a pretty good sentiment. That's awesome. I'd love to hear from you on where you see retail investing evolving over, let's say, the next decade. You and I were talking about before this how crazy, just how crazy time is progressing. And so that is probably a harder question than it would have been if I asked you a year ago. But swing away.
Yeah, I think there's a few mega trends that, frankly, we're underwriting with our time and efforts that we're putting into building this company. And then I think it's just playing out in real time. Number one has to do with technology. So I think the last 10 years have been very much about increasing access to the markets. So, zero commission, fractional investing, which we sort of pioneered. There was like our contribution, I would say, to the space, and what drove a lot of our early growth, and doing that in multiple asset classes. So now everybody have access to invest with no fees all the way down to like $1, right? So basically, like, you take all the excuses off the table from that perspective of why people wouldn't invest in the markets. But then the second thing, and I think that's coming now, is like now everybody has access to buy anything really from any type of account that they might have. Now the question is, what should they buy and why? That's like the next wave that we're going into now. And that has much more to do with research. That's where AI comes in, portfolio construction. I think that's maybe the next wave of where we see some of the AI trend going that we're playing a lot with right now. And we'll have more to share about that sort of later in the year. But I think that's generally how you can think about like the technology piece of it, access, and then information, you know, and like leveling the playing field, really, whether you're an individual investor or institutional, largely across those two fields. And then I think from a macro perspective, you might have heard about the great wealth transfer. And for the readers, if they haven't, just Google it. You might even be able to Google GWT, but it is essentially a estimated between 80 and 100 trillion dollar wealth transfer, the largest ever in the history of mankind, of funds being passed down, capital, money being passed down, mostly from baby boomers to millennials. Sort of like a bell curve distribution over baby boomers and millennials, obviously, with some going to some Gen Xers, some going to some Gen Z. And that is going to be wild because it's just an unfathomable amount of money going to a generation that I think prefer to do things in certain ways. Like if you think about our generation, you know, we grow up forced to build investing literacy very early on, whether it's because housing prices are so high that the only way to get ahead is to help the markets compound in your favor, whether it's buying the dip during COVID, you know, crypto, which generally younger people understand better than older people, I would argue, right? So there's been so many things that have happened in these last 5-10 years. And not to mention that access piece where people have just become self-directed investors, like from a super early stage, because they didn't have to go down to a brick and mortar store and set up an account at Charles Schwab with some financial advisor or whatever, like they could just download an app and start going and then learn by doing. The whole social phenomena that played out during 2021. So like you've had so many things happen for individual investors of our generation that they're just fundamentally different than the older generation. And so when the money moves from there to here, that's going to change the landscape quite drastically. And it's kind of interesting because I think millennials and Gen Zs are sort of often the unluckiest generation for some of the reasons I mentioned, housing prices, you know, inflation, this, that, and the other. And I think all those things are kind of true in isolation, but what they will also have going for them is they stand to inherit more money than any other generation. And they've built investing literacy much faster, much better relative to previous generations. So the combination of that from a macro point of view, I'm really excited about. But yeah, fundamentally the great wealth transfer is just, you know, close to $100 trillion changing hands, going to an audience that is a little bit more technology first, that want to invest on natively technology-born platforms, and maybe not companies that were set up 50, 60 years ago, which actually, if you look at all the incumbents, that is sort of the average age, the mean average age of most of those incumbents. And so they're obviously they're way pre-internet and, you know, started off really on the phone.
And for those who are going to be getting some of that wealth transfer, invest it. Okay. Don't gamble it. If you want to do some gambling as like a fun thing, okay. Invest it.
100%.
That's also, you want to talk about, I was going to ask you a question, the biggest challenge for retail investing platforms over the next 5 years. It's that in the past, you didn't have to compete with just always, like, I saw something, I don't know the exact stats, so I'm not going to quote it, but something around like how many people are actually gambling even along with investing or versus investing, and it's pretty crazy.
Yeah, it is. It is. I think so. So this is a great point, and there's a few things. There's something we obviously make a big deal out of here, because we try to really build the platform for people who take it seriously. And so when we think about our product roadmap, all the tools we build, all the assets we make available, like that's sort of the lens that we're doing. And so we didn't really get into the election betting thing or whatever, because it's a little bit like we're more focusing offering fractional corporate bonds so people can achieve 7% yields by lending money to some of the best companies in America, right? So I think fundamentally people tend to start off a little bit higher risk and then become lower risk as the pool of capital that they're investing from increases, but also as they just mature, quite frankly. I think one of the biggest things that really make you stop gambling and messing around with other things in life is for starting a family, getting engaged, having a kid. And so, and that's always, frankly, what we've kind of, if you go back and listen, like, I think from the beginning, we've always talked a lot about like people building like a long-term portfolio, buying and holding companies and assets that they love. And so that's really who we built the platform for. Now, it's a free world. You can do whatever you want. It's your money. And so you can gamble away at public as you want to. But I think fundamentally speaking, we build most of the platform out for people that really want to build that sustainable, sort of tried and true long-term portfolio, like a little bit more of the Buffett school. Yeah, is what most of our customers like to like subscribe to, like that philosophy, a little bit of value investing, but fundamentally just like buying and holding money long-term, because it's just proven that if you own any kind of diversified portfolio really over a 10-year horizon, you actually can't go wrong, right? So, and so I think, but I think one of the things that's interesting in relation to the great wealth transfer is if you get a bonus at work, you want to gamble, you want to get into some funny meme coins or like whatever, do a short-term risky options trade, that's fine. But I think when you inherit money, it comes with almost a sense of fiduciary responsibility. Like even if it's yours, it's suddenly like, it's a little bit like you want to take that a little bit more seriously. And I think the evidence shows that a lot of people do. And then I said maturity as well also just has a lot to do with it, because most people lose money gambling, and you can only lose money for such a long time before it stops being fun. So,
I mean, your approach is right, and thank you for building the tools that you're building for serious investors. When you look at the people that are gambling too, a lot of times they're not actually, most of the people are not gambling much money. It's like putting $10 on a 10-game parlay because they could potentially turn it into, whatever. What you're saying is when this transfer happens, you're not going to put all that or a huge chunk of that and risk it's less than 50% chance you're going to win in many cases, right? Yeah, it'll be interesting. So that's
most people, exactly, most, like even myself, if I'd been transparent, for like most of my money is in a long-term diversified portfolio. I mean, most of my money is in public, but like outside that, but I make a bunch of short-term trades, and I'm not making them going into them thinking I'll lose money. Like I always have a thesis, but it's fun to underwrite a thesis. It's fun to try to spot something nobody else is seeing. And sometimes it works and sometimes it doesn't, but I do it with relatively small amounts of capital. And it is one of these like low risk, high reward bets. Like that's also where the fun is. You don't want to be high risk, low reward. Like there's no fun in that. Then you're better off giving your money away. And taking the tax write-off, right? So I think that's generally how most people think about it too. And like I said, there are always times where the animal spirits come out and people maybe overexpose themselves a little bit to this, than the other. But it always comes back to some sort of a baseline where like, and it's much less binary than most people think. I think like most people think like, oh, you're either this or you're that. Like a lot of people are like 90% long-term and 10% let's take some risk. Let's take some very high degree of risk on some of these speculative trades. And if it doesn't work out, I know that my 90% are going to compound at 10% year over year, so I'll be okay.
I think you'll see the serious investors too. Like, it's one thing. It's one thing to be gambling and doing all this other stuff now, when the markets are just always doing well. Tools like yours become they're important now, but they become even more important when it's also not the best time. Right? Because like that information is gold at that point. I mean, it's always gold, but you know 100%. What I mean? It's, yeah.
100%. No, I think you're, I mean, look, the people that bought the dip in March 2020 are incredibly happy right now. The people that bought some of the correction that you saw in 22 and 23 are incredibly happy. And that's a little bit why part of the thinking behind having the first and really sort of only modern multi-asset brokerage platform has been that there's if you have all these assets on one platform, there's always places you can go. Like maybe you go into the bond market to find yield, right? Like I think in 2022 or 23, the 6-month T-bill was the most invested in thing in public because it was yielding north of 5.5%, in a fairly tax efficient way for most people living in high tax states and so forth. So there's always places to go with your money. And then as sentiment starts to shift, you can shift that around on the platform, right? So, in very real time, last couple of months, specifically since the election, Bitcoin's been on a tear. Crypto generally have been rallying. A lot of people going from yield. We had like the 5% yield on public for most of the year. A lot of people moving from that into crypto. And again, the ease of just doing that with a couple of kind of swipes and like that, I think, because it's essentially people rebalancing their portfolios, but they're never really taking money out. They're just kind of rebalancing across the different asset classes, positioning self for different sort of eras, right? Now you're going to have an era to the political climate where obviously they're talking about corporate taxes being cut, which impacts earnings positively in the stock market. Crypto gets less regulated, that impacts crypto positively. But yields are coming a little bit down, although they're still staying fairly high from historical latest so far. But it's not, so if all that shifts, we want to be the place where people can like very easy move with the market, and that's incredibly important for folks to like set themselves up like at least once a year. I think people should do that, maybe even once a quarter.
Yeah, it's I advise everyone to go check out both of your products, but especially get started with Alpha. Really appreciate you being on the podcast again. I don't know of many people that have been on both.
To back.
Yeah, this is awesome. And I'm going to see you in a few. Well, I'll see you at Human X, right?
I think so, yeah.
Cool. Awesome. All right. Well, thank you so much again for joining us, and we'll talk soon.
That's good to catch up. Take care.